Stocks are in positive territory, as you can see in the early minutes of the North American trade. The big question for many investors is, has the market damage been resolved? Are we now at a bottom? Let's bring in David Nelson, Chief Strategist at Belpointe Asset Management. We'll begin with that question. David, thanks a lot for joining us. First of all, you caution investors against getting too optimistic about the idea of a market bottom forming anytime soon. Some of your recent commentary on that topic says that markets are defined by an extended process of stabilization and confidence rebuilding. How far away do you think we are from that process?
It's early in the process, and it's not a point in time. I wish it was that easy. I've lived through a few of these, back in during the financial crisis in October of that year. You had probably an 11-12% move in the NASDAQ, shortly after the Lehman Brothers collapse. The bottom was literally, 5-6 months later. In coming out of the dot-com bust in January of that year, we had a massive move up in a single day, and the bottom was almost 2 years away. So it can take time. I'm not saying it's going to take that long, but it is a process. It does require confidence building, and there's been a fair amount of technical damage right now that we're going to have to repair.
You also note that investors during this period of volatility have flocked back into the Mag 7 stocks as perceived safe havens. Does that make a lot of sense?
To a small degree, I get it. If we are in a challenged time right now, for most of these companies, while they may not be growing as fast, they're going to be growing, and they're somewhat recession resilient in that sense. So for smaller companies, they're not going to be able to navigate that. You can't paint them all with the same brush. These companies are very, very different today, and they're not going to move in a uniform fashion. So you're going to have to pick and choose your names.
Okay, picking and choosing is what you do, and one of the stocks that you like right now is Cisco Systems. Why so?
Yeah, this is a name from the past. It's probably one of the most steady Eddie names and the most comfortable names I've had this year. If you look at the NASDAQ right now, you look at technology, down double digits. Cisco's only down, it's probably down less than 2% at this point. It's no longer just a hardware company. They're a software and services company, networking, wireless access points, security. All of that fits under the Cisco umbrella. And when you're looking at a company like this, and you're getting the stock at less than a market multiple, and you're getting close to a 3% dividend, that's been very, very important this year, that dividend.
Okay, and another one you like is C.H. Robinson, a lesser-known company. It's a logistics company. You say that with tariffs taking center stage, you like this stock.
Every company out there is trying to manage their supply chains, especially if you're a multinational here. So that means managing the logistics of your supply chains. How are you going to get your inputs in, and how are you going to get your product out once you've manufactured it? If you look at C.H. Robinson, they're an asset-like company, so they don't own the planes, trucks, and ships. They just leverage the third-party assets. So in that sense, if we did hit a recession, they're going to fare very well.
Okay, I'll just tell our viewers that the government of Canada has announced some measures just seconds ago to give 6-month tariff relief on some U.S. goods. Some automakers are exempt from Canadian tariffs. These headlines are just moving now. We'll get to them after our conversation with David Nelson. But be aware, the government of Canada has announced some tariff related, what it calls a remission framework for the auto industry in Canada. So, David, what do investors do with all this market turmoil and it being a stock picker's market? How do they find stocks that, like the two you've mentioned, fit their portfolios?
I would say right now it's going to be very difficult. Any stock I mentioned to you right now, Paul, could be down 10-15% in the next couple of weeks. All it would take is an announcement out of Washington here. I think most investors are right now comforted by the fact that Scott Bessent seems to have risen to the top there. He's well respected on Wall Street. And I frankly, he would deny this, but I think he went to the president and said, look, the financial plumbing is starting to come undone. You're going to have to roll this back a little bit.
Okay, what about fixed income? We've seen bonds sell off in a big way. Well, first of all, what's that telling us about market sentiment when we see stocks and bonds sell off at the same time?
It's telling you that there's some cracks in the facade in here. When you see the dollar go down, yields go up, credit spreads widening, and gold going through the roof, that tells you there is something going on that's becoming a challenge for the financial plumbing. And that's even more important than the stocks. When the bond market falls out of bed, that's a lot more serious than whether or not your NVIDIA is going up or down.
David Nelson, thanks a great deal. David Nelson is chief strategist at Belpointe Asset Management. Always appreciate our conversations with David. See you soon, David. Yes.